Inflation is up, home sales are down. Not the news we want to hear. However, there's more to it than that. And I'm going to dive into the details right here, right now, on Live at Lunch. Thank you so much for joining me. I'm Lambros Demos on this cloudy and snowy, I guess, Wednesday afternoon. December the 4th. Wow. Only 3 weeks until Christmas, believe it or not, and only 4 weeks until 2025. Crazy. But right here in the present, there's lots to talk about. As I mentioned off the top, the inflation CPI index went up again month over month from September to October. We don't have the November results yet. That's coming out later this month. Hey, Fernando, how you doing? And the real estate stats from the Toronto Real Estate Board also came out early this morning, and they were a little disappointing because, as you recall, the sales activity went up from September to October, and I was expecting them to go up again, at least slightly, or stay in line from October to November. But however, that's not the case so much. They actually declined a little bit. But if you listen to TREB, because they always like to, play up the positive, they're saying, wow, sales are up 40% year over year. So you may hear a lot of that out there in the media and social media posts, etc., from real estate agents, etc. But that's a year over year stat. And, when you look at what was happening a year ago in November, the market was absolute garbage, right? So you couldn't go any worse than that. So no wonder it picked up from year over year. But the real story is month over month. So as I mentioned, we saw an increase in activity starting in September, and then it went up in October, and now kind of flatlined a little bit, went down in November. So it's going to be interesting to see what happens in December, because again, if you remember, there are some new mortgage rules coming in December the 15th. So maybe some people are waiting for that to happen so they can qualify for a better mortgage. They're extending the amortization from 25 years to 30 years for first-time home buyers. So they're also increasing the cap for a 20% down mortgage. Now, if you buy up to 1.5 million, just under that, you can still go in with less than 20% down, versus before anything over $1 million was 20% down. So maybe some people are waiting for that. It's going to be interesting to see what the stats are in December. But before I dive into the stats, I want to talk about inflation a little bit. As I mentioned, the inflation numbers came out a couple weeks ago for October, and they did tick up a little bit. So it went up to 2% on a year-over-year basis, and that's up from 1.6% in September. So when it was 1.6%, everybody's like, whoa, inflation's all the way down. And then the Bank of Canada followed that up with a 50-point policy rate cut, which everybody was happy about. But now it's back up to 2%. And this is not all bad news, because this was anticipated. So we kind of expected inflation to go up again. I even think I mentioned it in my last live, and Bank of Canada mentioned it too. They're expecting it to fluctuate up and down. The 1.6% was an aberration, in my opinion. And part of the reason is because of gasoline prices. So gasoline prices, not so much that they went up month over month, but because they went down last year more so from September to October, creating a bigger jump this year. So it looks like the prices went up much more. But if you recall, in 2023, from September to October, gasoline prices went down, and that created a bigger gap for them to go up this year from September to October, and they look at it on a year-over-year basis. So that was a part of the reason why inflation ticked back up again to 2% from, oops, sorry, just trying to wave at some people here. That's why inflation went up again year over year. But also, The other reason inflation went up is obviously shelter costs. And shelter costs are leading the way in this inflation rate. And they have been for the last few years. And a lot of that has to do with interest rates going up and up and up and up. And in fact, when you look at the breakdown of the consumer price index being the inflation, all these things contribute to the consumer price index, right? You got food, you got shelter, as I mentioned, household operations, clothing, footwear, transportation, the list goes on and on. And out of all these things that contribute to the inflation rate, shelter costs leads the way by a lot at 4.8%. So shelter cost inflation was up 4.8% versus the overall rate at 2%. Right, everything else seems to be hovering around that average rate of 2%. Some are at 3%. The next closest to shelter is health and personal care at 3.1%. Right, so shelter actually makes up 69% of the total annual inflation. Okay, and that a lot of that has to do with mortgage interest rates, and that's part of the reason why the Bank of Canada has been cutting interest rates. And it's interesting to see here because in their report, in StatsCan report, it says here, and this is funny, that's why I want to read it. It says shelter price growth continued to ease in October, rising 4.8% year over year, compared with a 5% increase in September. So shelter prices, even though they're leading the way, they're still coming down slightly. Slower price growth in the mortgage interest cost index in October compared with September applied downward pressure on the shelter component. Well, why do you think? Well, we had 4 interest rate cuts since the summertime. So when interest rates are coming down, obviously the shelter cost component is going to come down. And then it keeps going on. Mortgage interest costs have been decelerating on a year-over-year basis since September 2023, followed by a peak in August 2023. Well, what happened in the summer of 2023, we had those 2 consecutive interest rate hikes, and that was the last time interest rates went up in June and July. So no wonder it peaked in August, right? So this is kind of, I mean, I have to laugh, otherwise I'm going to cry. But the good news is interest rates have been coming down since June of this year. And the next cut is actually a week from today. So Wednesday, December the 11th. Expect another interest rate cut, in my opinion. I think there's going to be maybe a 0.25% interest rate cut. I don't think it's going to be a huge cut like last time, 50 points. We didn't have an interest rate announcement in November because they skipped November. They skip August and they skip November. But I think we're going to continue on with the rate cuts that have been happening since June. And my prediction is a 0.25% interest rate cut. So we'll see what happens next week. And I say that because of all this information here. I know the overall inflation has gone up a little bit, but that's not what all that Bank of Canada looks at. I mean, they look at the breakdowns as well. So there's many things they can look at as well. And the unemployment, I believe, has also ticked upwards from 6.4% to 6.5%. So that's something else that they'll look at too. So that's why my prediction is a 0.25% rate cut on December the 11th, exactly a week from today. So if you have any questions, by all means, please post them here, and I'm happy to answer them while I'm live. You never know who else has the same question, so by asking your questions here, you're actually helping other people as well. If you happen to be watching this on the replay, by all means, you can still ask your question and I'll get to it as soon as possible. If you prefer to send me a DM, that's fine too. You can send me the DM and I'm happy to answer it offline. But like I said, you never know who else has the same question as you do. So go ahead and ask it here, and you're helping other people that way. All right, enough about inflation. Let's move on. As I mentioned, the Toronto Real Estate Board has come out with their, all rainbows and kittens, version of the stats year over year, up by 40%. But when you look at it month over month, the story is a little bit different. So I like to look at not everything in the GTA, but focus primarily on the areas that I work in mostly, which is Toronto, Mississauga, Brampton, and Oakville. If you want stats from the other places nearby, like Hamilton or Caledon or Burlington or anything like that, by all means, I still have access to it, and I'm happy to share those with you. Send me a DM, and I'm happy to discuss those with you. But looking at these main areas right now, when we see in Toronto, let's start with price. It came down slightly month over month by 7%. Days on market went up 6%, so that kind of tells us that buyers are still waiting a little bit. And number of listings came down as well. So it's not all bad news that sales came down, because the supply came down as well. So it looks like just people are waiting. And I think they're waiting for the mortgage rate changes. Sorry, not mortgage rate, mortgage rule changes in December, but rates as well. A lot of people are anticipating another interest rate cut this month. So that might be the reason why. So supply went down 11%, but also home sales went down 11%. So it's a wash, right? Then in Mississauga, home prices came down about 8% month over month. Days on market went up by 5. Again, people are holding back a little bit. Supply went down about 5%, while sales tumbled about 23%. So Mississauga has a large number of condominiums, and the condominiums, the apartments at least, are the ones dragging the prices down and the overall sales down, because it's very difficult to sell a condo these days. People aren't touching it with a 10-foot pole, and that's part of the reason why home sales tumbled, both in Mississauga and Toronto, which have a large share of condominiums. All right, looking at Brampton. Prices were relatively flat in Brampton. Surprise, surprise. Days on market went up about 3 days, no big deal. And supply came down about 9%, while home sales fell about 11%. So kind of close there. So again, there's a bit of a stall in the market. Looking at Oakville, this is kind of the aberration of the four, because prices went up about 4% in Oakville. From almost 1.5 million to almost 1.6 million. But again, Oakville is a very small sample size, so we can't read too much into that. Days on market went down versus the other three that went up by a day, no big deal. I'll call it flat. And then both listings and sales went down in Oakville. Listings about 14% and sales about 12%. So again, relatively slow markets all across the board. And even though everything boomed year over year, and you're going to hear that narrative everywhere, that sales are up 40% year over year, keep in mind that month over month, they kind of stalled a little bit. And I think it's because people are still on the fence, and they're waiting for, like I said, another interest rate cut this month, as well as the mortgage rules to change this month, allowing people more options to buy and giving them better qualifying rates and negotiating power. All right, moving on. So I mentioned supply came down as well, so average price wasn't affected too much. And part of the tumbling of sales was due to condos, and you can see that especially in Mississauga and Toronto. And that's pretty much it, because Brampton and Oakville don't have too much of a condo demographic there. So again, if you have any questions pertaining to the stats or inflation or anything else, by all means, ask it here. I'm happy to discuss it. Or again, if you want to send me a DM, I'm happy to take it as well. So with that said, have a great day, everybody. And yeah, go Leafs, go.